I didn't make estimated tax payments when I had my distribution company or when I had my beauty salon. I didn't go to hair school. I'm not a hairstylist, but I also know that they're not talking about estimated taxes in cosmetology school or barber school. I believe that schools don't teach it because the schools are really meant to produce employees.
You're not just a hair professional, you're a CEO.
I'm Jen, founder of Hair CEO, a business coaching and accounting firm, helping you build a premium brand focused on profits without overpaying in taxes. On this channel, I bring you videos on business and taxes tailored specifically to self-employed hair professionals and beauty business owners. So if you're new here, consider subscribing. I originally set out to do a video on how to make estimated tax payments, but then I realized that the majority of hair professionals that are self-employed that I talk to, they are still learning about estimated taxes. And then those who do know a little bit about estimated taxes don't even have enough money in the bank to make the estimated tax payments that are due. So if that's you, you're in the right place. This video is going to give you a brief overview of estimated taxes. Then I'm going to talk about the 9 reasons that I see why self-employed hair professionals and really business owners don't make estimated tax payments. And at the end of the video, I'm going to go over my strategy for how you can make sure that you have enough money in the bank to make estimated tax payments when they're due. Let's get started. Estimated tax payments are tax payments towards the final amount that you're going to owe. The United States has what's called a pay-as-you-go system. So as you make money, the IRS wants you to make payments towards your taxes. If you are not going to owe $1,000 or more, then you don't have to make estimated tax payments. But as soon as you are going to owe $1,000 or more, then you are required to make these estimated tax payments. And the dates that they're due are typically April 15th, June 15th, September 15th, and January 15th of the following year. However, this can change based on when the 15th falls. So for example, for 2024, the second quarter payment that would have been due June 15th is actually going to be due on June 17th because the 15th falls on a Saturday. Estimated taxes are also due at the state level if you live in a state that has income taxes. So those same dates, April 15th, June 15th, September 15th, and January 15th of the following year is the same schedule that the states use. So you would have to make estimated tax payments to both the federal and the state. So you may be asking yourself, okay, well, how do I know if I'm going to owe $1,000 or more? Or how do I even calculate how much to send them every single quarter? Well, there are really 2 main ways that you can figure out how much to send the IRS. The first way is to look at what you owed the prior year. Looking at your last tax return, you take that amount and you divide it by 4 and you pay that amount for every single estimated due date. So for example, if you owed $2,000 in taxes for federal, then you would pay the IRS $500 on April 15th, June 15th, September 15th, and January 15th of the following year to make your estimated tax payments. That's an easy way to figure out how much to pay when it comes to your estimated taxes. You may also notice that that is how the estimated tax vouchers work. If you work with a tax professional that has given you vouchers, those vouchers are based off of how much you owed that year, and it's giving you that amount broken into 4. The second way of figuring out how much you're going to owe is by using a tax form called 1040 ES. Now this form asks you a series of questions and then you can come up with how much money you need to send the IRS. Now this form can be a little complicated for some people. We've actually created a resource that will calculate this for you. It's based off of this 1040 ES, and you just enter the numbers and it will tell you how much money you should pay towards each quarter. A lot of business owners find this really helpful, so I'll make sure that I leave that resource down below in case you want something a little bit more accurate than just taking the 4 equal payments, or if you don't want to fill out that Form ES yourself. So that's as far as we want to go when it comes to an overview of estimated taxes. Now we want to go into the top 9 reasons that I see self-employed hair professionals not make estimated tax payments. And you may be asking yourself, well, Jennifer, how do you know the top 9 reasons? Like, what makes you aware of these things? Hair CEO is a business coaching and accounting firm. So we only work with hair professionals related to their bookkeeping, their accounting, their taxes, growing their business. So we work with them very hands-on. And so I'm talking to self-employed hair professionals all of the time. And this is me looking at all of the reasons why hair professionals have not made tax payments and putting them all together in the list. And then another reason that I know is because if you're new to this channel, you may not know that I used to own 2 hair businesses. My first business right out of college, I was importing hair products, and I was a distributor of hair products to different hair stores and beauty salons and barbershops, not as many barbershops. And then I owned and sold a hair salon. So both of these businesses I owned and I sold, and I know the reasons why I didn't pay estimated taxes. And the first reason, actually, before I go into the first reason, I want to say that this is a no judgment zone. And I always like to start out with being a little vulnerable, because when it comes to taxes, this is a very sensitive and private subject, and it's hard being vulnerable when it comes to your finances. And so, not that I'm proud to say this, but when I had both of my businesses, I didn't know about estimated taxes. I didn't make estimated tax payments when I had my distribution company or when I had my beauty salon. And that's actually the first reason why a lot of business owners and self-employed hair professionals don't make the tax payment. It's really because of a lack of knowledge. I studied economics and accounting in college, and they didn't teach us about estimated tax payments. I didn't go to hair school. I'm not a hairstylist, but I also know that they're not talking about estimated taxes in cosmetology school or barber school. That it's just not taught. And the reason that I believe, of course, this is my personal opinion, but I believe that schools don't teach it because the schools are really meant to produce employees. And so they're not going to teach you about what it takes to have a business or to run a successful business and be compliant. They're just not doing that. And then it reminds me of, I know when I first started my business, you hear people say, oh, you need an accountant and a lawyer when you're running a business. Well, a lot of times, especially for a hair business, it doesn't take a lot of money, thankfully, but a lot of times we don't have the money to hire these lawyers and accountants when we're just starting out. So we are trying to figure out everything on our own. I know that was the case in my scenario. When I had my distribution company, I was starting out with very little money. I was using all of my money for transportation costs. I had products coming in on cargo ships and cargo planes. I didn't have money for a lawyer. I didn't have money for an accountant to tell me this stuff. In my eyes, a lawyer and an accountant was a nice to have, not a need to have. So that first reason is you don't know. The number 2 reason is you think it's optional. You might be thinking right now, like, yeah, I thought it was optional to pay estimated taxes. Well, it's not. Like I mentioned, the U.S. has a pay-as-you-go system. It is required. If you're going to owe more than $1,000, the government requires that you make estimated tax payments. And so I'll never forget, I was talking to this barber. I can't remember what state he was out of, but we were preparing his taxes. And I felt bad because I was just like, oh my gosh, I got to tell this guy that he owes $18,000 just in federal taxes. Federal taxes, we're not even talking about state. But I felt like, oh, I'm really going to have to break this news to him. And then he told me, he was like, oh, okay, yeah, I've been saving up for taxes. And I was like, what? He was like, yeah, it's no problem. And I was like, okay, yep, that's $18,000, but they're also going to penalize you, and the penalty was like $500+. And he was like, what? Why? And I was like, yeah, waiting until the end of the year really isn't an option. they require that you make these payments during the year. So here it is, he's been saving for the entire year and just didn't know that it was required. He thought it was completely optional, so he didn't. He didn't make the payments during the year. So that's the number 2 reason. Now, I must admit, these are not in order. I would say he was probably more of the exception than the rule. So if I had to rank them in order, that's not like the number 2 reason, but it's just number 2 because I'm going through 9 of them. All right, so the third reason is because your income is so irregular. So you really may relate to this because you're like, yeah, I'm a business owner and I'm not working a W-2 job. I don't have the same amount that's going to come into my bank account every single week or every 2 weeks. I'm at the mercy of appointments that come in. I'm at the mercy of how many products people are buying. So it's hard for me to factor in estimated tax payments because your personal bills, even your business expenses, they're due either weekly or monthly, annually. All of these things are consistent, but your income isn't consistent. And so when that happens, it's like, yeah, I can't make estimated tax payments because my money is funny, right? My money is funny. So that's the number 3 reason I see a lot of hair professionals not making estimated tax payments. The number 4 reason is because the taxes are not factored into pricing. This is a huge one. This may be you set your prices based on what somebody else set their prices at, or maybe you used to work in a commission salon, so you're just going off of what the commission salon charged, or maybe you are using your expenses, but you're not considering the profit or the tax obligations that you have. The taxes need to be factored in to your prices. I go into this in depth in our coaching program because pricing is an art, it's a science, it includes math, analysis, supply and demand. There are so many things that go into pricing your services. I mean, this is like a whole episode right here of how to price your hair services. And I'm actually going to be doing a part 2 of one that I've already done. If you haven't seen it, I will link it above, but I've gone into how to price your hair services. The 5th reason I see is that you're not saving for taxes, or you're really inconsistent with savings. You may save at the beginning of the year. You're feeling like, okay, I'm gonna start this year off great. I'm gonna put money aside for taxes, but then you get lazy during the year. I see this happening a lot. And so that habit of putting aside money, it stops, or it just hasn't even happened. The thing is that unless you're telling your money where to go, it's gonna disappear. You're not gonna know where it's going. And so you have to say to yourself, okay, this is the money that I am saving specifically for estimated taxes. It's just no getting around it. The 6th reason is that you're overspending. We can think that we're running such a small business. Maybe we have a few commission stylists or barbers, or maybe we're working alone and we're solo. You might be thinking like, I don't need a budget. That's for big businesses. But no, the smaller the business is, I would say the more important it is to have a budget. And when you don't have a budget, it's really easy to overspend. I see a lot of our clients that are new to us when we do their bookkeeping. One of the things we see almost immediately is that they are overspending on food. A lot of the food expenses just aren't tax deductible, so we tell them to stop that immediately. And like I mentioned, this is a no judgment zone. I want you to know that at some point I took an audit of my own eating out and meal expenses. Now, I wasn't doing this on my business card, but just in my personal card, figuring out, okay, where is my money going? And you will be amazed at how much we spend on food. So I would challenge you to do a personal audit of your spending to see how much of your money is going towards food. The 7th reason that I see people not making estimated tax payments is because they're still paying on debts that they owe the IRS from 2-3 years ago. I mean, just to give you an example, I was talking to a hair salon owner right now. She owes $39,000 to the IRS. That's just at the federal level, not even the state. And you may owe the IRS from 2-3 years ago, maybe not that much, but you felt that. You're like, yeah, I'm still paying on taxes from prior years, how am I supposed to pay on taxes that's due in the future when I still got a bill with the IRS that I'm still paying on? I get it. That is a legit reason why you may be scared or reluctant to save for estimated taxes. I mean, when you owe the IRS, it's typically in the thousands, right? And so when you think like, oh my gosh, I have so much anxiety with this IRS debt, sometimes you don't even want to look at it. You want to hide from it, but you don't want to hide from it. You want to be making payments on that monthly and then still making payments towards the future payments. The eighth reason is because they are afraid they're going to miss opportunities or feel like they need that money for as a security blanket. So they're using the tax account as emergency savings or savings. And being very transparent, yes, I have an accounting firm. Yes, this is what we do for our clients, but I still hate paying taxes. And so to give you an example of how this even can apply to myself, I see my tax account and it's got a nice chunk of money in there, and I'm in the process of expanding. We're adding people to the team at Hair CEO. And part of me really didn't want to make the last quarterly payment because I'm like, oh, that would be really nice to have as a cushion for these new employees that I'm bringing on, just so that, I have it as an extra security blanket. But I can't do that. In reality, that's what my savings account is for, not the tax account. So don't fall into that trap. I see a lot of hair professionals, they have these opportunities to do courses or to work with mentors. And sometimes these mentorships and these classes and these courses are thousands of dollars. And it's just like, you know what? I am going to not pay my taxes so that I can spend my money here and then it's going to make me more money. It's a risk. You don't know if that's going to make you more money, but we do know that taxes are always going to be due. The ninth reason is because they just do not agree with the tax system. I don't know if you know a person like this, but I know that there was a guy at the barbershop that was next door to my hair salon, and everything was a conspiracy. Everything was, oh, the man this and the man that, and history says that we're not supposed to pay taxes. And, all of a sudden this guy has a PhD in taxation apparently. But if you live in the United States and you are making money over a certain amount based on your filing status, then you're going to owe taxes. It's as simple as that. And if you don't pay the taxes, it's not considered being woke. It's not considered being intelligent. It's literally tax evasion and you can go to jail. So those are the 9 reasons that I see why self-employed hair professionals and business owners in general do not make estimated tax payments. So we've talked about those 9 different reasons. Now we want to talk about my method and how you can save for estimated tax payments and make these payments when they're due. And it's called the C.A.S.E Method, C.A.S.E Method. This is what I teach in my group coaching program. This is what we teach to our monthly bookkeeping and accounting clients. And so you'll see here that I have these sticky notes, but in reality, they don't have anything. I just thought they look really nice there. The C in the C.A.S.E Method stands for create. Create a budget. You want to make sure that you have a business budget that you can look at and know how much money you need to come in and how much money is going out so that you can calculate, number 1, your prices, and number 2, make sure that you have factored in there some tax payments. So that's the first thing, create. The second thing that you want to do, just so that you know, behind door number 2, still blank. The second thing that you want to do is automate. You want to automate the percentage that you are taking out each month and saving for taxes. This is really important because you want to make sure that you're putting enough aside each and every week. Honestly, that's what I recommend. And for a lot of people, this is where you get confused because you're like, okay, I've heard some people say I need to save 20% for taxes. Some people say I need to save 30% for taxes. But remember, the 20 or 30% is based off your net amount. What I recommend is that you put aside 15% from your gross. So before you even spend any money on anything, 15% of what comes in, I would say put towards taxes. And what I'm going to show you is another resource for you that I will leave down below in the description is a link to our money feeder. We produce this every single year and it feeds your money. You go in every week and you put in how much money you made for that week. So this is based off of services or products. You put that gross amount. And then what happens is it's going to automatically calculate based on percentages that we teach in our program, how much to put aside for yourself, how much to put aside for expenses, how much to put aside for taxes, and then of course savings. And it's going to calculate that automatically. So you'll see here, I put in the amount. So I'm just going to put a very round number. Let's say for the week that I made $2,000. And you'll see here that I put in $2,000, and I just do this at the top of the week. I do it on Mondays, which are a really popular day for a lot of hair professionals. And you'll see that it's going to automatically calculate. It's going to put 50% towards owner's pay. So that's $1,000. And then for the operating expenses, it calculated $600. And then for taxes, it set aside $300. And then for savings, it set aside $100. And so it'll do this every single week, and you'll see the tally on the side, and it shows you a tally for the entire month. So as you fill this out for the month, it's going to tell you how much money you made. A lot of business owners find this really helpful, so I'll make sure that I leave that resource down below. The third thing that you want to do is, right, for consistency. The third thing that you want to do is you want to separate. We want to separate how much you're putting aside for taxes into a separate bank account. This is so important. We do not want to mix that money with any other money. So if you only have one checking account that you're working out of, I need you to create a second one. I need you to create a savings account for your taxes. If you already have a checking account and a savings account, then I want you to get a third account just for taxes. I want you to separate that money because it is for tax purposes, and we want to remove it from anything else that we are saving towards or any other money. Lastly, the E, right? The E stands for evaluate. You want to evaluate based on your actual numbers if you have put aside enough money for taxes or not. So going through it again, it's create, automate, separate, and evaluate. If you implement this strategy, you will have money every single quarter in order to make those estimated tax payments. Let me know in the comments, now that you have this method, let me know if you want me to create a separate video for how to now make the estimated tax payments.